Maybe I'm finance coded because I worked at a trading firm for my first job, but one of my favorite analogies to think about life in is comparing life to a stock. And there's many reasons for this. I feel like comparing life to a stock makes me think about the long term and not worry so much about things that happen on in the short term. It also helps me maintain a sense of rational optimism that I believe things will get better over time, and also reminds me about the compounding nature of life, of how the faster or the more progress I make at life or the different avenues of life, the better that I'll get and the faster the things that I want will come to me. Now, in terms of modeling life like a stock, so when I think about the stock market, I think about some ticker that's going up and down every day. And the ticker could go up and down for sometimes seemingly no reason. There'll be days where stocks go up by 5% and there's no material news, or it'll go down by 5% by the same amount. There's days where something could blow up and the stock could decrease by 20%, but it could then increase by like 50% the next week or something like that. So the short-term nature of the stock market is not reliable. It's very volatile and it's based on things that we often cannot explain. We love to assign stories, reporters, analysts, whoever love to assign stories to these things, but sometimes these things just happen. There's a quote out there that says, in the short term, the stock market is a voting machine, but in the long term, it's a weighing machine. That over time, the companies that perform well, their stocks will improve quite reliably. However, in the short term, it's based on emotions, it's based on unexplainable events, it's based on headlines, etc., etc. Now, how does this really relate to life? Well, I believe this relates to life very deeply in terms of the day-to-day first. So in terms of the short term. Now, in life, it's pretty quite obvious that there are good days and there's bad days and there's everything in between. Bad days could feel really bad. It's maybe something bad had happened, or maybe like I just kind of woke up on the wrong side of the bed. Sometimes days just don't go well and there might not be a good explanation for it. There's the exact opposite too. Some days go really well, and I like to sometimes subscribe to some reason to them. I like to assign a reason to it. Maybe it's because I had a really good coffee this morning, or I took the right amount of caffeine, or I got really good sleep last week, or I talked to a friend. Whatever it is, some days are just really good. Now, when I think about the bad days, under the stock kind of model of how I think of life, it's a good reminder that bad days are just temporary. The stock market has downturns, but it often has downturns temporarily. And in life, there are bad days. So the bad day could be over in a day or in a week, or sometimes maybe a couple of weeks or a month. But either way, this is a temporary occurrence in life. And on the flip side, on the good days, it's also actually good to remind myself, I find, that good days are also temporary, because then it makes me enjoy them a bit more and live in the moment and actually cherish that moment a bit more, knowing that this is just a temporary thing. Maybe tomorrow or next week might be quite worse, but because of that, I get to enjoy the current time and the good time or the good experiences that I'm feeling in the moment. So this day-to-day sense that lives could be volatile, it's good days and bad days, really helps me with that optimism in the short term, while making me a little bit more grateful in the short term as well. Now, what happens if the day-to-day volatilities start to span longer? Let's say the bad day turns into a bad week, which turns into a bad month, into a bad quarter, and so on and so forth. How does subscribing to the stock model help me with these downturns? I feel like when I think about these downturns, I also think about drops in the stock market. Now, let's say if we take a stock that I've gained over time, let's say it rose from $10 to $100, there could be any sort of downturn for a long extended period of time. Let's say the stock drops 10% over a couple months. Now, for the $10 stock, it'll drop $1, and for the $100 stock, it'll drop $10. But either drop is still 10%. And I like to make that analogy to life, where a 10% decrease in my life currently is much greater than a 10% decrease in my life previously. And that absolute term often makes my mind think that the loss I'm losing right now is much more significant than I had in the past. And it creates this sense of fear that maybe I'm losing so much that I will never be able to recover of what I lost. Is seeing the absolute value and thinking, geez, that's like the most my life has regressed in whatever metric I'm thinking about. And not necessarily is net worth, maybe it's just overall happiness. That overall happiness has regressed in such a large amount, in that large absolute value, larger than I've ever seen, that it convinces me that I'll never be able to come back. And thinking about my life in absolute terms is not beneficial in this sense. I feel like it's better to see it in a percentage sense, because not only am I losing more now if my life regresses, but for me to try to bounce back, I'm now working also with a larger skill set, which I feel like is not represented in the absolute term. So for me, when I think about my life and I think about, let's say, the stock history of my life, let's say if I do experience a 10% downturn right now over the next extended period of time, I could look in the past and say, hey, I've had 10%, 20%, 30% downturns in the past. And those times I felt like my world was falling apart. Now, obviously my world wasn't that big, so I guess objectively on absolute terms, there's not much things to lose. But the feeling was still the same. The feeling of my world falling apart was still the same. The feeling of being sad and being down and not being motivated is still the same as it was before, as it was now, or as it will be now as I go through this hypothetical downturn I'm going through. And that frame of thinking of myself now and comparing to myself before gives me a certain sense of frame and helps me maintain optimism of understanding that I've been through this before. Now I have more skill sets to handle the larger decrease that I have in life. And as such, I should think about myself in a longer term that things will be okay in the end, because they have been okay throughout my entire life. Now, during these downturns, there's also a reset of expectation as well. I feel when I start regressing in some things, I tend to want to compare myself to myself when I was at my peak. A really good example of this is when lifting. So when lifting and thinking about PRs, I always compare myself to my peak form, my PRs that I've made. And even though in current stages of life, like myself right now, where I'm not focusing on lifting, I still tend to compare myself to my best shape. Now, obviously, that's going to create this sense of melancholy because I think, oh my God, I'm no longer at my prime. I've regressed. I've lost steps, etc., etc. But that's not the right comparison because sure, I'm comparing myself to myself, so it's still the same person, but the circumstances are different. The circumstances are, let's say, if we take this analogy or take the example of lifting, where I'm actually kind of going through, but it's not so much a downturn, but a controlled de-optimization. But if we run with this example, if I compare myself to my prime, the conditions are not the same because right now, I'm not focusing on it anymore, or I'm going through a phase of melancholy. I'm not that motivated, but I'm still hitting the gym. Just things aren't going that well for me right now. I can't compare this, or I can't reasonably compare this in good faith to myself in the past, where maybe I was dieting really well and I just felt really strong. My health was really good. Let's say I wasn't drinking. I wasn't doing anything like that. My training was on point. It's just the contexts are different. And because the contexts are different, it's kind of a no-brainer that of course I will be worse than myself if I were to compare myself to that stage. And that makes this comparison a little bit disingenuous and just frankly inaccurate. If there's anything, I should be comparing this downturn to a previous downturn, to like a previous time where I also had melancholy and I also like decreased by 10% or whatever the downturn is. I should be comparing that instead of comparing myself to a bull run or a time where my stock and my overall happiness, meaning whatever it is, was going upwards. So there's like also a reset of expectations that also occurs when these longer term downturns tend to occur. And not only is there like an expectation reset of how I benchmark my progress or like how I compare myself to, but there's also a reset in the progress I'm going to make as well. Like, if we think about a stock, and let's say there is like some great depression of some sort, and that analogy of life would be like a prolonged period of melancholy or sadness. Obviously, I wouldn't be expecting my stock in like a down economy to like shoot up by 100% or something like that. I wouldn't expect it to increase by a large amount in a short amount of period of time. Obviously. And I wouldn't believe that because the economy is doing bad, or maybe there's persistent headwinds, which are like business resistances that are occurring, which is the same thing as life. When I have a long-term downturn, I can't expect myself to aggressively climb for like the next day or next week or next month even. And that's totally okay. It's resetting my expectation such that to try to make sure my stock doesn't drop and just kind of sits there. It doesn't have to climb, but I just have to make sure that it doesn't keep dropping. This follows Hormozy, something that I love from him, where he says, bad things don't come in threes, but thing that people often think bad things come in threes because one bad thing happens and that affects us so much that we let go of a second thing, which then makes us let go of the third thing. So it becomes like a chain reaction of bad things that occur because it affects our behavior and how we enact action on these different things that occur in life. Now, coming back to the stock market analogy, it's when having that downturn is to make sure that the stock doesn't keep plummeting, is to make sure the stock value maintains and that life could still chug along in the other areas that are maybe not as bad and maybe there isn't actually ground to lose. It's when I do something bad at work that I make sure that I keep my gym still relatively consistent. I can't do bad at work, but also let my entire physique and my approach to health all fade and then let all my confidence self implode. So it can't become like this chain reaction. It must be limited to some scope that I could then work on slowly improving over time. So modeling life like a stock helps me also think about the downturns, where it keeps me rationally optimistic that I could get through it since I've been through similar downturn occurrences like the decrease in 10%. And it also helps me reset my expectations as well, where my expectations aren't not aligned with the current paradigm of where my stock is at, if that makes sense. Now, taking the same stock analogy, it also gives me that reminder that life has a natural compounding effect. And how I like to think about this is in terms of a specific skill set, but also in terms of like the breadth of things being consumed. So first, in terms of a specific skill set, it's definitely well known that 10 hours being invested in one thing is very different from 1 hour being invested in 10 things. And there's kind of like this exponential curve that occurs that the more hours given to one thing, the more productive and the more progress can be made at that one thing than all the 10 different things combined together. And this is because there's a sense of focus that could be made and a skill set that as it builds, it becomes easier to obtain more advanced skill sets that could produce more results over time. It's this building of leverage that occurs as more investments are being made. Now, obviously, this occurs in stocks. A 10% increase for a stock priced at 100% is $10, while a 10% increase of a stock priced at $10 is $1. Obviously, a 10% increase is a pretty large increase in either one, but a 10% increase in one that's valued much higher results in a much higher gain in absolute terms. So as much as as much as I've tried to move away from absolute terms when thinking about downturns, I like to think about absolute terms in terms of upside. It kind of shifts the framing in my advantage, where I have this cheese that I'm chasing after, if you will, of what lures me to want to make more progress, which tends to become self-serving because then I tend to reward myself for good behavior, which makes me want to pursue more good behavior, which gives me better results, which then it just spirals forward in a kind of snowball effect. So thinking about upside in this compounding effect, I find has really given me a lot of benefits in terms of focusing on one thing for a long duration of time. Now, also across domains. Now, this is something I tend to find also, which makes me conversely not only want to invest a lot of time in one thing, but also be good in several limited things, is that I find that having something be very good is really good, really nice. And I'll give concrete examples of this. But having one good thing is good, but then having two good things is much better than having one thing good. And then having three things good is much better than having two things good. And the example here is, for example, having great friends is great. Like, you have people to talk to, you have people to hang out with, whatever. Even if the rest of your life is like not fun, having great friends is good. Like, it's a good place to be, and it's much better than having nothing, than having a boring life or not enjoying anything and not having friends. Having great friends is great because at least you get to share dinners, holidays, just things with and create good memories. Now, having great friends and additionally a partner, I find, is even better than just having great friends, because now not only do I have all the benefits of having great friends, but now I also have this person I get to share everything with, and I feel like I have a team to build life with, and that, on his face value, in my belief, is way better than 2x than just having good friends. Now, having great friends, a great partner, and now a job that I really enjoy is way better than having great friends and a partner. Like, imagine having great friends and a great partner, but having like a shitty job. Like, it's great that when you get to spend time, but now when you go to that job and you need to make money to sustain yourself, you're just like sad, and maybe your heart's not in it. But now let's say all three things are firing at the same time. It feels great. Like, it feels great to talk to your friends, then talk to your partner, then go grind at work. And then when you come back from work, you're like pretty satisfied because you enjoy your job. You get to come back to your partner and get to talk about it. You get to meet friends. It just becomes like a flywheel of all these things in your life are great, which then pushes you to do more great things in those specific areas that you're already winning. Now, obviously, if we add something else of, let's say, great health or a great body or a great physique, whatever, on top of it, it becomes even greater, because then there's other places to draw confidence from and positive reinforcement from to get better across domains and in terms of depth, in terms of one specific area. Now, obviously, there is like a trade-off here where I find I can't be good at everything. Like, there must be focus to actually build that accumulated skill in one thing so I can make significant progress in this one thing. Now, I tend to follow this model in terms of investing in one area and keeping the other areas pretty healthy, and try not to give too much ground and lose too many things from those other areas. So let's say I focus at the gym, and if I'm focusing at the gym and I'm trying to hit specific goals, then I'm not like looking, for example, to grind a lot at work, because I need to think about meals, I need to think about workout times, I need to make sure I'm not stressed, I'm getting good sleep, just etc. there. So it helps me, like, thinking of life as stocks helps me remind myself of the compounding nature of life, how things get better get better quicker as things get better over time. Now, perhaps the best thing about looking at life like a stock is reminding myself of looking at the long term. One thing I always like saying or asking friends is, are you currently bullish of your life? And why I love this question and why I love thinking about it for me is, do I believe in a long run, like in a span of 5 years, that my life will get better? And the answer is almost easy to respond to, because just like how the stock market increases by like 10% or like 9% annualized on a 10-year basis, on any 10-year basis, I also have the rational optimism that my life will get better objectively over like a 5 or 10-year period, that myself now will be significantly worse than myself 10 years from now. And that's irregardless of any of the bad things that happen. If we look at the stock market, it is a fact where over a 10-year run, over any 10-year run, the stock market didn't like fall. And it's like near the annualized annual rate of return of around like 9 to 10%, which is significant, because if we draw our 10-year period across the Great Depression, or across world wars, or across the dot-com bust, or the 2008 financial crisis, it still rises by 9% annualized, right? There's these long downturns And despite these long downturns, it still does well over time. So there must be that belief that it does well over time. And I like that analogy for life because in life, there could be those long downturns, similar to the Great Depression, similar to the 2008 financial crisis. But despite of this, there must still be that long-term bullish belief that life will get better over time. And this is a frame that I really love to think about life in, is thinking about life as a stock market. The day-to-day could be volatile, and maybe that affects mood, but that's not the most important. What's important is the long run, which will hopefully be positive, or will most certainly be positive, despite any sort of downturn, and will get positive quicker as it compounds over time. And that's an argument of thinking about life like a stock market and being bullish in the long term. This is episode 21 in Nobody Yet, or 22 in Nobody Yet. And I'm recording this on June 23 at 10:10 p.m. I'll see you next week.